Welcome to the Rupee Rakshak Market Update, a special session on why the markets are falling. So we have the Rupee Rakshak research team here with us. So they are addressing the questions which I thought ki you guys are also having because of the market fall. So my first question to Mohan sir is, when the markets were dropping in mid-October, we thought it was because of the upcoming US elections on which is happened on November 5th. Now that the elections are over and the Trump has won, why the markets are still falling?
Good question, Mansi. I think if I have to rephrase your question, what you are saying is, before the US elections, the same research team was saying the reason for fall is uncertainty in the global.
The
It is
upcoming
because
US
of,
election.
but the question is, market is still not
Still-
recovering,
Yes,
and
it's
it is still falling even after the election result is out. It is not just your concern. I am sure everybody has this worry as to why markets are still falling. Because Trump, after winning in such huge majority, it should have cheered the market, and we were expecting that markets will go up. See what has happened right now. If it's only specific to the US election, of course the results have come, but still there is no clear direction in the market that what kind of policies this new government will take. If we know, I am sure most of the people know that US elections are very complicated, and for actual policy making and for actual oath taking and the actual office, the president office to work, it will almost be by the time the January 1st week or 2nd week is where we will get to know more information about what kind of a policy stance the government is going to take, especially the US government. So there is no clarity. Now markets fall or rise, there are multiple factors that are working. It is not just about US election, it is about after the election what kind of sectors are going to be encouraged, what kind of investments will be encouraged, what kind of geopolitical systems will change. Will the new government help in stopping the Ukraine-Russia war that is going on, and what will be their stance in terms of China? We know for sure the Trump's actions in the last term, the markets are always volatile when Trump is the president. What is going to be his stance? Of course, there are a lot of speculations in terms of what he is going to do. He is going to be against the EV, the renewable energy, and he is going to be India pro because he is a good friend with Modi, and the last time there were a lot of initiatives taken where India is going to benefit in certain areas, and also Trump is against the export of jobs that is happening from India to US. So there are a lot of concerns about what is going to happen when it comes to the policy making. When there is uncertainty, it is the best thing is not to be in the market. It is not for you and me, it is for the FIIs. The big institutions, they do things in different ways for their requirements. So the market forces are in action. For this uncertainty, it is possible that there is further drag in the market, and then there are lot more macro situations that are there.
Thank you, sir, for addressing my first question. So my second question is, what are the global macro factors that are affecting the markets? So Suman sir, can you please address the question?
Thanks, Mansi, for the question. So as we know, the market is falling due to heavy sell-off by the FIIs, and we know that FII sell-off was triggered by the $10 trillion of stimulus declared by Chinese government. But yes, after of course FII moved their investments to China market, it didn't sustain very long, and we have seen that after a week of rally, I think it is again nosedived. So of course FIIs probably would have not benefited much either by shifting from the Indian market, but also I think the anticipation of Trump becoming a president, I think some of the FIIs investments are also anticipated to be moving to US market as well. And now we know that Trump has won, and the dollar is getting stronger that was already anticipated, and we have seen that starting from October, the dollar index was growing very strong, which is kind of a little bit of negative for us, for our rupee, Indian rupee, and we know that dollar is currently trading at all-time high, which is almost close to 106 today, as of today, where Indian rupee was at 84, which is almost at the last 1.5 years low. So
you mean to say dollar index is at 106?
Yeah, dollar index at
106 all-time high.
At all-time high. So of course, RBI has stepped in to manage the rupee, because of course they have to stop the depreciation of rupee, because that is important, fundamentally very important for our economy. So that only way they can do it is by selling the dollars. So of course that will impact the forex reserves also. So that probably RBI is looking at how to manage that going forward. So looking at all these factors, I think we are seeing that FII selling has been aggravated of late. So we anticipated that 24,000 level in Nifty probably would be a good level where we can start seeing some consolidation, but again after Trump winning, we are seeing that falling is continuing. So that probably aggravated by the Fed rate cut last week. So Fed has cut the interest rate by 25 basis point. So we know, like when the rate cut happened, so the cost of borrowing also is cheaper now. So it is, which is very interesting for the FIIs, because they can now borrow money for further investment. So they might be, that might be another reason why they are shifting to some of their investment to US market as well. So that's my outlook about the macro.
So the rate cut is going to continue, and in the US, so that is what is attracting the FIIs to take out this money. And since the reverse is happening in India, if you see the dollar index going up and the INR USD almost touching 84, it is not attractive for people investing in dollars like FIIs to where the dollar goes up and they invest in Indian equity, whereas there is a rate cut in US and there is more profitability. So that is the flight of capital happening.
Exactly.
Okay. And also, Suman sir, this Indian CPI, if you see.
So CPI is another concern. So which of course I think it is at 14 months high right now, which is at 6.21% reported this month. So that is another concern added to the already the miseries that we are seeing in our market. So of course that is also impacting our rural economy. The consumption, of course, that will impact the
especially the food inflation is very high,
and the retail inflation as well. So that impacts the rural economy. So and we are seeing that, and it's not that it is happening overnight. So it has been happening for quite some time now. And now we are looking at last 14 months high inflation, which was not the case earlier. It was well managed. So now it is slightly going out of even RBI's estimation. So that is impacting the rural consumption definitely, and we have seen that the FMCG sectors, even the consumer goods sectors, have been suffering because of that, and we have seen those sectors are underperforming from last 3-4 weeks. Even auto sales are down. So I think all these factors are definitely impacting.
Thank you, Suman sir, for the interesting insights that you gave. So my next question is, when will the market recover? When will we see our portfolio in green?
Thanks for the interesting question, Mansi. So I'm sure everybody is eager to know when the market will start recovering and when they will see greens in their portfolios. So what I feel that, of course, the December is a holiday season, even for the FII investors in general. And by January, we are anticipating that Trump will be invited in our Republic Day event, and he'll be visiting India. I'm sure a lot of deals will be worked out during his visit. So it will be interesting to see how that benefits India. and also budgets is followed in the month of February. So I think by after budget our Indian policies, economic policies also will be clear, and by then I think US the current government's agenda as well as their policies will be, the new government's policies will be quite obvious to everyone, and I think that will set the next course of action for the market.
We can expect the bull to return by February something, February,
that's,
then
that's
the next
my anticipation.
next 6 months you expect that it will be a good run up once again.
Yes.
Thank you, sir. Whatever you have said that the market will recover by January, February. So any logical reason behind this?
As actually that is what is research all about. Whenever we say something, it is based on lot of data and the churning of one is our experience, then the data. It is the data that tells us, and for this it's very important to get too technical. So I would ask Sri Vidya is good in technical, so let her show something on the screen and explain what are the technical setup that will prove that this market is likely to come back probably by January, February. Whatever me and Suman discussed, I think she's going to give the proof.
Thank you, sir. So as far as technicals are concerned, the technical chart looks really good, and we have seen a good bullish rally since the past year. So a small correction of 10% is likely to be expected. So now here, as you can see in the chart also, 23,700 has been a major support, that is the 0.50% of the Fibonacci levels. So now it has crossed that level and it has breached that level too. So the next support is comes at 61.8%, which is also considered as the golden ratio in mathematics too. So this plays as a major support, and further down also we have the 200 EMA acting as a major support too. So all these three major supports are pushing Nifty up. So today, as we can see, it was a major fall today, but still we could see some kind of 100 points rejection also. So for this week or for the next few weeks, we could see some selling pressure, but yeah, bulls are also back, as even Suman sir mentioned. We could see a consolidation phase for 3 to 4 months, and then we can expect a good bullish rally. And also, as far as the other indicators are concerned, the RSI level, so it has crossed the 30 level, that is the oversold level, and now it has taken a bullish divergence too, and now again it has come to the RS30 level. From here we can see a good bullish rally, and we can see good reversals to be on the plate.
So Srividya talked about Nifty levels. So let me take you to some of the key market breadth parameters which we normally study during such fall. So this is basically percentage of stocks above 20 SMA. So if you see historical, currently the level is between 10 and 20, and if you see historically, whenever it reached that level, market has bounced back every single time. So of course this may take little longer this time, and it may stay a little longer at this range, but this shows that market is extremely oversold right now. Similarly, if we look at the percentage of stocks above 50 SMA, they are also at the rock bottom and almost at the historical lowest level. If you look at the 100 SMA also, they are also heading towards the lowest level of lowest historical levels. Right now they are at 18, so already entered between the 20 and 10 range. So if you see historically, every time it reached this level, market has bounced back. So we can anticipate that the market, the selling has already to the great extent right now, and probably we can soon expect some reversals from this point. Another key important metrics is the FII future long percentage. If you see every single time when the readings were between 30 and 10 level, market has bounced back from here. Even during November 2023 also we have seen from 19,000 level, market had rallied up to 26,000 at all time high. Even during election time, when market we saw a big corrections, the single day election result day, big corrections, we saw that the levels were between 20 and 17. So right now it is at 24. So probably another few days of sell off, and probably by mid of next week we can see a clear direction that where we can expect market to go up. Also another important parameters is the open interest PCR value. So, PCR value in the Nifty has been 0.66 has been the historical lowest, it has never been below 0.66. So, we are also approaching almost closer to 0.66. So, once it hits 0.66 level, probably we can see some bounce back in Nifty as well. So, these are the some of the technical parameters. Those who follow, I am sure after COVID many investors are quite technically aware. Those who do not follow, do not worry, I think this is just for the clarity, so that you know it shows the research whatever studies we are doing from our end to give confidence to our clients.
Wonderful. I think that was the logic for our view that markets are likely to be great by January, February, and from there onwards you will see lot more interesting things. I hope that is
So
convincing.
thank you everybody for the insights.
So, we have almost come to the end of our discussions. I think the questions are over. So, I have something to share with all those who are watching this video. It is very important. See, when you come and invest in the stock market, you know that stock market is risky, and you are coming with an intention that I am okay with the volatility. If anyone does not want volatility, this is not the right asset class. So, that is very important, and when things go wrong in a year, you will only see 1 or 2 bad months, like what we are seeing the October and November now. It is not that all the months in the year will be bad. So, it is important to have lot of patience and hold on to the stocks, and you are there with advisors, you have someone doing all the research for you, and have confidence in that. If you are new investors who have only invested in last 1, 2 months or 3 months, those are the ones who will be seeing the red. Even in our portfolio, many clients who invested in last 1 year, 1.5 years, they are still sitting on substantial returns of over 15%. If you are a trader, you do not trade beyond a week. So, there is no question of talking about loss or profits, whatever be the price level, whether it goes up or goes down does not matter for the trader. If you are an investor, you need to be very clear, are you a short term investor or are you a long term investor? If you are a long term investor, you should not worry whether you came in 3 months back or 1 year back, you should stay invested in the sectors or the stocks that are picked for you by the experts. So, there is nothing to worry. If you are a short term investor, you are looking to make quick money in 3 months or 6 months, the only thing that we offer is the sector rotation strategy, and sector rotation strategies are high risk by nature. Every theme, every sector by nature it is high risk. So, what you need to do is you need to stay invested. If you are a short term investor and you are getting into sector rotation strategy, especially if the market is falling, it is possible that sectors will fall much more than the index. When the recovery happens, it will also recover much faster than the index. So, it is important to stay invested, never cut the losses. When the market fall is happening, hold on to it, never look at your portfolio report for at least couple of weeks and stay invested, and be clear that you are an investor in the stock market and not a trader. So, these 2 points is something Mansi I wanted to communicate. I am sure you will have lot more questions. So, you are free to ask us. We have the WhatsApp community, Rupee Rakshak community, and we have this customer service number. You have relationship managers, you have product team, there are research analysts. So, you feel free whenever you get worried, concerned about any market level or any news that you read, whatever that concerns that you have, please pick up a phone, call us and talk to your relationship managers, get a meeting with the research team and get personalized attention. It does not matter whether you invested 1 crore or 1 lakh, we are here to give you all the information as to what is happening in the market and make you feel good about and not worry about it.
So, you can reach us, and our product team and research team and our relationship managers will get in touch with you one to one. We will address all the queries. Thanks for watching.